that just came out a short while back. India's industrial production has soared during the month of November, growing at a pace of 8.4% and hitting a 25-month high. On the other hand, though, retail inflation came in at 5.2% in the month of December. That was largely in line with what the street was expecting. Latha Venkatesh now joins in with more. So, Latha, tell us, what are these numbers essentially pointing to?
Well, in the first place, of course, they also point out to a low base. We should remember that the November industrial output numbers are coming on the back of November 2016, when the consumption was not at its height, or even output was not at its height because of the demonetization phenomenon. But nevertheless, the 8.4 number is much higher than what the street was expecting, which was more like 5.1, 5.2%. Excellent positive surprises coming in from capital goods at over 9%. Consumer non-durables coming in at some 23%, and infrastructure coming in rising by about 13%. So a very strong growth number, stronger even after people accounted for demonetization. On the other hand, the inflation number at 5.2 is also a recent high. I think it's a 13-month high, a 17-month high. But this was largely in line with expectations. With this 5.2 number and core inflation coming in at 5%, the Jan-Feb-March average is expected to come in closer to 5%, whether the Reserve Bank was expecting 4.6. So the market will start mildly penciling in a rate hike sometime in 2018 from the Reserve Bank, but people will hold out to see what the fiscal deficit numbers are, and the Reserve Bank would do likewise. Expect on Monday, therefore, bond yields to rise, but the more overwhelming sentiment in the markets, both bond and more particularly equity, will be the excellent industrial output numbers, better than expected industrial output numbers. So I think there will be a fillip to the already bullish equity markets.